Sent you an invite, Celeste. If you can accept it, come up on stage. Howdy.
Hello.
So Celeste is like my very best friend, and I was her bridesmaid in her wedding, bridesman in her wedding, and and unfortunately right now she is a little quarantined. But even though she's quarantined, she is working her ass off in loans. So I want just a little, and we have a little bit of time here. I just want to talk about what is the loan market doing? Like how many deals are coming through? Is it crazy? Is like what are you experiencing on your end?
It's still a little crazy. I mean, obviously we all know, well, I don't know if everybody, but I mean, most of us that are in the industry knows that rates dropped a lot, and we obviously started getting really busy. Purchases are super crazy. We have a lot of buyers coming in, and obviously if they don't have, all their cash put together, for closing costs and whatnot, it's really hard to get into a home right now. It's just a crazy market. It did take a turn a little bit about a week ago. Rates kind of came up a little, so it did slow down for some, for some refinances and whatnot. But I honestly do not see this being a huge deal. Rates going up a little bit. We're still seeing rates in the high twos, which,
Yeah.
I mean, I've been doing this for like, 20 going to 26 years, I think.
Yeah.
I have never seen rates in the 2%. So, it's a crazy market. And like I tell, a lot of my clients ask me, well, is it a good time to buy, right? Prices are high and whatnot. But the bottom line is, I think the right time to buy will be the right time for you, right? Whenever you're ready, regardless of how much prices are or how high they are,
Yeah.
or how low rates are. Like, when you're ready, you're ready.
Right.
So, I mean, if anyone is on here just, listening because they're interested in real estate, if this is something that, you've been wanting to do for a while, it's definitely the time. I mean, rates are super low. So regardless of the prices being, higher than we usually have seen them, payments still come out to be probably lower than if prices were lower and rates were higher, right?
Yeah.
Like when you try to compare apples to apples, it actually comes out better when prices are higher and the rates are lower.
Yeah.
So,
And-
yeah, I mean, it's still crazy,
Yeah, and what Celeste is basically alluding to is, a year or two we were at the high threes, low fours, and there's people out there that wouldn't be able to qualify. But let me take that back. They probably qualified for a mortgage, but that mortgage is probably only $350,000 to $400,000. And so at that interest rate, well, what are you going to find for $350,000 to $400,000 in any area of the greater Los Angeles area? So, but now the interest rates have dropped down to the twos. Those people that didn't qualify now qualify to buy a home, and now that $400,000 budget is now increased to $650,000. So that's why there's a big frenzy right now, and that's why there's people are so desperate because they're like, we have to get in, because if we don't, the prices are going to continue to go up, and the interest rates are going to continue to go up, and then we'll never be able to own until we see this happen again. And like Celeste said, in her 26 years and in my 21 years in this, I've never seen rates this low. And so, I kind of gave them a history lesson, Celeste, earlier, saying, every 18 and a half years is kind of like the average that the cycle of the mortgage or the real estate crisis goes, or recessions happen. So we've had 11 of them in our country's history.
Right.
They've never been shorter than 17 years. They've never been longer than 24 years. Right now we're in year, I think, 15, 16. So we're in year 17. So because the crash was in 2008 to 18 is 10, 19, 20, 20. Yeah. So we're in 11, 12. We're in 13th year, and the correction happens for the first 13 to 14 years in a recession. The correction happens where it goes up. And then once it hits that 14th year, then it starts coming down. So, so usually you have 3 to 4 years of a down market and 13 to 14 years of an up market. And right now you're in 13. So I don't see this train stopping. I see it going for at least the rest of this year and probably all of next year, because for the federal government to meet and increase the rates, they would need to increase the rates significantly, which they won't do because it'll hurt our economy. So even if they met every every quarter for the next 4 quarters and raised it 0.25%, by this time next year we would only be at 3.8%, which is still a very, very good interest rate comparatively speaking with the history. Wouldn't you agree?
Yeah.
Yeah.
100%. Yeah, absolutely.
So yeah, I mean it's definitely a crazy market. Let me ask you this, Celeste, because Marissa had asked about appraisals. She's like, you should ask me like, what do I tell my clients about appraisals? What are you seeing with appraisals? Are the appraisals coming in on, because you do more volume as far as the mortgage side, so every deal has to have an appraisal. So
Right.
how many appraisals are you seeing where you're having to appeal or they're not coming in at value, even though they offered more for more than list price on the house?
I honestly haven't had any issues with appraisals.
Nice.
Except for one. And I'm talking about maybe in the last, 6 months or whatever. Like, I've only had one. And this one was just, I don't know if I told you about it, but it was just about 2 weeks ago that we closed. Appraisal came in. It was 30,000 under. Everyone was very surprised because we all thought for sure the property would appraise. The buyer came in with an appraisal waiver, so they had already waived their contingency on the appraisal.
Eesh.
So that was harsh. I suggested to rebuttal, even though we already know how rebuttals go. They usually don't go anywhere. But agent gave me only 3 comparables. I submitted them. I kid you not, a date later, the appraisal came back at full price. I don't understand how that happened or not. But I mean, the one that had an issue, we were able to still save it, and the appraiser came back at full price. So
Yeah, I know I had mentioned that earlier. I said, when you're working with a broker to do your mortgage, they want to package that deal and sell it on the secondary market, the investor, the bank that's funding it. So more often than not, they're going to try to be more liberal and be more understanding, especially if you're a buyer where you have an 800 credit score, a back end ratio of 20-30%, and you make $250,000. They're going to be like, well, everything else, if this is the one thing that we need to kind of budge on, then let's see if we can't make it happen. So you do have that leniency.
Yeah, but I haven't really heard anyone in the industry complaining about appraised values being under, even though it's been so crazy. So I don't know. I don't know. I mean, have you heard of anyone else?
I haven't. No, earlier I was talking about like none of my clients, because Marissa was asking me, what do you tell your clients when you have to ask them to remove the appraisal contingency? And so the first thing I have to tell them is like what that means. What does it mean to remove your appraisal contingency, and what's at stake if it doesn't appraise? And then the other thing is I have to ask them, are you comfortable with this? Because you're the one ultimately that needs to come out of pocket the difference if it doesn't appraise. And I can pull my comps, and I'm going to be like, look, this 3-bedroom, 2-bath house, it'll comp out at the last 3-bedroom, 2-bath house that's very similar within a half-mile radius, sold for $780,000. This one's listed at $750,000. So we know it's going to appraise for $780,000, but will it appraise for $8,000?
Right.
And that we don't know, because it depends on who the appraiser is.